Hello, and welcome to FTT Chats, where we sit down with some of the great and the good of FinTech for a bit of a chat. So today I'm talking to Aritra Chakravarty, founder and CEO of Project Imagine, who brings us things like Dozens and Pi One. Hello, Aritra. How are you?
Very good, Liz. Thank you for having me.
Excellent.
How are you doing?
I'm doing pretty well. I've come out well in this sort of lockdown global pandemic world that we're all living in. So I made blueberry muffins this morning for breakfast. So I feel very, very domestic. It's awesome. So I'm going to start off with our first question that we ask everybody. And I feel a bit strange asking you this question. And it's who are you and what do you do? And I know for people who are already in our community and went to our festival last year in November, the FinTech Talents Festival. I think if you had a beer or took a selfie, you had Dozens branding somewhere in that picture. So you guys were all over. And so a lot of people in our community know exactly who you are. But for those who don't, please tell us, who are you and what do you do?
Yeah, that was a great festival. The high point was the debate with the rest of the guys that we started off with, and then it set the tone for the 2 days. So, yeah, so thank you for having us there as well. I didn't question the concept Project Imagine would have made for a more interesting answer, maybe. Who are you and what you do? But I'll try and stick to Project Imagine for this. Explaining that. So for Project Imagine, we started off with our consumer fintech brand in the UK called Dozens. Project Imagine is sort of the employee brand and the overall company name that launches these new brands. So Dozens is a brand of Project Imagine. And within Dozens, we have a couple of licenses from the FCA that lets us offer current accounts, budgeting, cash savings under our investment license, and then ETFs and stuff as well. And we're in the process of adding more investment products using our license, and also deposit products with partnerships with other banks. So that becomes a really full-featured offering that we like to say takes people from a journey of being a spender to a saver to investor. So whether you're a spender struggling to save or a saver who has never invested, then Dozens should be a choice of platform. The entire business model for Dozens is the bit that's truly differentiated, or the biggest experiment on, because the UX is the UX. We are slightly different. We've got a very broad offering, so the UX is different from other apps. But really where we're different is that we don't want to make money through your credit. And that goes back to some of the topics that we discussed last year in November in the event that you mentioned. If banks are platforms, then we should be keeping platform rents like Airbnb and Uber. And if we're not platforms and we want to do fiduciary duties, then which would enable us to charge higher margins, then we really have to not do well when you borrow, because no one borrows out of happiness. Like, you're borrowing because you want to consume something and you don't have the money. And not all borrowing.
My mortgage. I absolutely.
Yeah, exactly. Like, at least with the mortgage, and if it's borrowing for a business or borrowing for a degree, like, you're investing into an asset that will pay out later. But if you're borrowing to go on holiday, which is ridiculously easy, in the UK retail banking space, it's actually easier to do that than to borrow for a business, for example, as we unfortunately in the last 3-4 months, even with the government schemes. That is really just banks going after revenue, right? There's no reason that it helps you. There's no reason that it helps the banks. It's just revenue. And unfortunately, we also see some fintechs going down those revenue tracks. So that's where Pi One comes in. So unless we helped a mission like Dozens with cash flow generation from the same company that could subsidize the growth period, because only at scale will it actually make profits, right? Till we get to that scale, we either have choices of going down what others have done and start credit products because they make so much money that they help you get to profitability sooner, or issue our tech and data platform that we use to create Dozens to other banks as a white label platform that they can use globally, actually. And that allows us 2 things. One, Dozens stays very mission centric. We never are pushed into things like overdrafts for creating revenue. And 2, we can go slow with the global expansion. So Dozens can be very UK-centric, maybe go out to some English-speaking expat countries like Australia, Canada, US next, Singapore. And Pi One can be the platform that goes way more global from day one. We're talking to and doing stuff with banks in Latin America, in Europe, in UK, in America, in Asia, like pretty much everywhere from day one. And we launched it only in that November event as a new brand, right? So in the last few months, it's been incredible traction on that offering. And the final sort of cherry on the cake was last couple of weeks with the Wirecard stuff. We were able to actually use that quite tricky situation for dozens to not only resolve it for dozens, but for Pi One, we can now do issuing of cards with our Visa membership and our Marqeta deal. And also do agency banking. So we can compete with the likes of Wirecard and other fintechs to come to the market with a more responsible sort of offering there.
Yeah.
It's quite a mouthful as a description for the company does, but I guess what binds it all together is we're in the financial services space. We want to create impact for as many consumers as possible, and we're going to do that, one, through our own brand that we have much more control over, and then also two, through other banking partners world over that sort of share the vision, want to use the tech and data, and that way we reach as many consumers as possible.
Excellent. No, I think that's an excellent primer on all the activities of Project Imagine. And actually, you kind of lead me into my next question. And I have to ask about Wirecard. I mean, Dozens is not alone in having to deal with the fallout from the fraud and insolvency of the German payments processor. I mean, it's kind of been wreaking havoc on the fintech community for the past few weeks. So I just wanted to ask, how has Dozens responded to the Wirecard fallout?
Yeah, it was quite the weekend. We were getting used to some tough weeks after COVID, and then this one was sort of between the weeks. Started on a Friday evening and was kind of done by a Monday evening. So it was quite hard physically and mentally sort of stay focused through it because how sudden it was, and kind of some of the, as I described to you in more detail why our setup is slightly different. It was quite unexpected what we had to go through that weekend. So it started sort of last year when the first Wirecard news came out, and then on the back of that we went and got our Visa membership, like Curve and others have done as well. So we were actually quite on a good footing to deal with the crisis. But of course, the Friday was still a kind of unexpected, very quick, very sudden decision that we had to deal with from the FCA. And the second bit that made us different was we never used Wirecard's licenses. We had our own licenses from day one. So which meant that every night I go to sleep, I know there's more money in customer accounts for Dozens customers than their physical ledger balances show. And that's the process of daily reconciliation that we expected to undertake with our own licenses, and we do. And that's the one email I read every night before going to bed. And so at no point of time you worry about, is there a money hole, which is a lot worse than is there access to money that that is safe. And both are equally important, but worrying about a money hole was not something we had to do during the Wirecard crisis because the money was with us. Then when it comes to the payment infrastructure, again, Wirecard only issued our first set of cards, and which we are now replacing with our own Visa membership. But we used the Wirecard as an intermediary for the first set of cards. And therefore, the only thing that should have been affected was the cards should have become unusable when their license was suspended. But because of the way Dozens is plumbed, and how the current account sits at the home of all of these asset classes that we service, like, for example, payments in and out, faster payments, payments to your cash savings from which you can go towards investment products and things like that. Everything comes from the current account, and we keep that balance synchronous with the balance on the card, because whatever is in a current account is what you expect to pay on the card. So what we faced with our processor was, along with switching off the cards, they switched off the non-card API that adjusts the balance with every incoming or outgoing bank payment. And therefore, to get bank payments back on, we had to either bypass the entire card processing stack or convince them to switch the non-card APIs back on or wait for the license to come back on. So we obviously put backup in place to switch off the processing and just kill the cards altogether. And then that way, at least everything else in Dozens would work till we reissued the new cards under Visa. And then while we were doing that on Monday, the Wirecard licenses came back on anyway. So we have that as a backup now. And now we have the medium-term plan of sort of reissuing the Visa cards and a good new business line for Pi One emerging out of the whole thing. I think what was different about our response was we had to sort of look at it from both angles, B2B, B2C. But in the consumer bit, we made some counterintuitive choices. Like, for example, on Friday evening, I switched off the service, because we actually have service 7 days a week, right? Usually you can call up someone at Dozens on a Saturday or a Sunday. And I asked the service team to stand down, which at the team felt like a sort of crazy decision. But my rationale was there's nothing that they could do to help anyone over the weekend anyway. It's our youngest people on the rolls over there. They would feel under pressure. They probably get a lot of customer angst. And there's nothing worse than someone reading off a script when you can't access your money.
Yeah.
So it just felt like if they could help, we would do it. But if they can't help and they're stuck in this position between a rock and a hard place, we're better off switching it off. And then we directed all the traffic from email, chats, and phone calls to a single community page where I was taking the questions myself. And I think if you read through the community page, you can see the sort of sense of urgency that denotes to people, and the transparency by which we were answering questions about why they can't have access to their money during that weekend and stuff. That played out well, and that's really sort of what gets you to how good or bad it's been for fintech, because losing access is never a good thing. But on the other hand, it teaches us a lot about what people expect from fintechs when it comes to communication. And when someone chooses a fintech to bank with today, they are probably making an informed choice, and hopefully they're never making it their only bank. We would never ask someone to make dozens their only bank, because not even high street banks are immune from technical failures. You've had it all over in the last few years. The most notable was TSP last year. It's not a fintech specific thing, so you should have multiple sources of money, and it's reasonably easy to open accounts now, so you should, where you can. And therefore, people who choose fintech should at least feel a little bit different about how they're treated when in a bad situation from other banks. So it's not just the event, but the post-event stuff, which is as important, I think, for me. And I think we overall had a good week. Like, we came out of it with very, very few complaints. On social media, we were generally trending positive, and commercially, we got a business line out of it. So should be good.
Excellent. Yeah, I know, because you mentioned the Marqeta partnership as well. That was kind of part of those.
That was 4 days. That was from Saturday morning, first call, to deal signed on Tuesday evening.
Wow.
So kudos to Marqeta as well.
Excellent. Well, no, that's really interesting. I mean, I'm glad you mentioned earlier about, not going to sleep until you read that email about, your reconciliations. And I'm really interested in sort of the inner workings of a founder. I mean, sometimes in the press, you only hear about a founder's psyche when they're a pantomime villain, and you don't hear about all the other people that the emails that they need to read before they can go to sleep. As a founder, I mean, how are you coping with that personally?
It's hard. I mean, it's definitely hard. It takes a toll on your family life, on your personal life. But it's really what I get out of bed for. It's not anyone's not forcing me to do this, or it gives me great pleasure to be able to challenge some of the banking norms and business models that I think are completely crazy, like the incentive alignment stuff that we talked about. Like, the phrase that I often use is like, if banks were car manufacturers, it's like car manufacturers doing better when they have more accidents or something. Like, it's so incentive misaligned. So being able to do something in that direction, it's a once in a lifetime opportunity. And for me personally, that cost makes complete sense, and I wouldn't be doing anything else right now. Mm-hmm. But broaden the question to, is it for everyone? It's probably not. Like, you need to be really, really sure that you want to go through all these ups and downs and the intensity of it. And it's very different from having an intense job. I've had intense jobs before in a big bank, because you don't have to ever worry about paying 50 people salaries, for example. And the fact that they trust you, because, the brand is the brand. It's not like a big brand, right? So when people sign up to working, like, a lot of that trust is personal. They trust you as much as the brand. And I feel that pretty much every day. And especially as we've gone through COVID as a firm, and, some 5-1 deals falling through. We had a pretty big term sheet from a VC that fell through. Like, dealing with all of that while you sort of secure employees' hearts and minds and physiological needs of safety. It's been a strange few months. And at this point, I think you could throw anything at me and I would just come up with a kind of crisis response plan. But hopefully that's not to be sustained into next year. We'll write off 2020 as the one to remember, but hopefully 2021 is not like this.
That's definitely the skills of a founder. Throw anything at me, we'll find a solution.
Yeah, I mean, there was some recordings from the Friday evening chats when Wirecard happened. Like, it was just a philharmonic orchestra to watch. Like, it was just so beautiful. If you took out the context and like fact that people had lost money because some guy made a $2 billion hole in accounting, forgetting all of that, like the crisis response itself was really good. And I think we wouldn't have got there as a team if it wasn't for COVID, because this is what tests teams and tests comm structures. And we put a lot of work into our virtual machinery working as if we were all in a room together. And you never, when you're doing it, you never know why you're doing it. Like, it actually feels like overkill to maybe a lot of employees, even like, why do we have this system now and that system? And then when you hit that crisis in that half an hour, it all comes beautifully to fruition. Like, this is why we've been planning for all of this for so long. And I think that was a big winning moment for the team.
Excellent. Yeah, no, so I'm gonna bring up COVID-19 and the global pandemic right now. I mean, someone mentioned to me the other day that it's as if all of our stress tests have come at once. And it's really testing everyone. I mean, maybe take a little bit more of a long-term view. Like, what impact do you think the global pandemic is going to have on fintech in the long term?
Do you remember this question from 10 years back when we had the global financial crisis? And then you heard about black swans for the first time and how they were more exceptional sort of circumstances and it could never be worse. And 10 years later, it's like, a 20% shrink of the economy in 1 month, and they're like, what financial crisis? The whole thing shrunk by like 2% at the time, I think. No, and that was big. If 10 times in 1 month. So I don't believe anyone anymore when they say this is the worst thing that could happen. I don't know if it's my career or what it is, but it seems to be once every 10 years right now. And I think COVID-19 is different from anything else before, simply because of how geographically spread it is and how sectoral spread it is. Like, it's not financial, it's not Western economies, it's literally everyone.
Everybody.
And what's scary is I don't think we're anywhere near past it. I think if you see the sort of trends in India and like the infrastructural, ability there to combat like exponential rises, it's not there. So probably the worst is still in front of us. Hope is that it's in certain pockets that we can localize, and then the rest of us can go about with business as usual. But I think till we get a kind of structural solution like the vaccine, it's all going to feel a bit temporary.
Yeah.
It doesn't matter who is right and whether my view is right or someone else who is more optimistic is right. What matters is there is multiple views, and multiple views means uncertainty. And the uncertainty here means people stop spending. If you don't have cash, you can't spend. If you have cash, you might hold out, which we actually see with some of our clients, because you think there might be better deals next year because things are even more dire, or the economic fruits of like some of the actions we have taken, the negative in this case, come through, and then they're waiting out for a better pricing or better opportunities. So all of that means not much activity for the rest of this year. Everyone's going to play safe, and if you have cash, sit on cash. If you don't have cash, try to survive, which is not great. That's the one thing I'm relatively certain of. And sorry to be sort of a party pooper there, but I don't think it's actually much better than that in 2020. But what's heartening is I think in the UK, we've been actually, by and large, very, very good governmental action compared to a lot of the responses in the rest of the world. And, for example, like tiny differences like, do they pay employees directly, like they've done in the US, like sent out checks by post, or do they pay them through the employer? And I think the UK mechanisms have been quite effective in that they have incentivized employers to keep employees in through furlough schemes and furlough bonuses and extensions and things like that, rather than cut the employees loose and pay them checks. So even tiny differences like that, where it's effectively the net cash outflow to the exchequer is the same, it feels like the UK is more thought through. And I think we have quite a strange combination of startups and stuff anyway, which are hard to deal with. How do you issue business loans to people with very few revenues and completely business cases built on growth? It's exactly the opposite of what banks do. And then put banks in the middle of that business loan, and what happens to the government guarantee then? And these are all quite interesting questions that the politicians and economists have had to deal with in the last few weeks. And I'm retrospectively quite amazed at how much they've achieved. It's not perfect. It's not been pain-free. But we're on the receiving end of the future fund allocation now. And these are things that 3 months back you couldn't have told me HMT was going to be potentially on our shareholder list, definitely on our debtors list. But all of these are coming through, and that's the fight back is speaking well. We'll survive it one way or the other. We're going to go through it, and hopefully 2021 is going to be a whole new thing with the vaccine and stuff behind us.
Yep. So the word of this year is survival. We get it. So let's end on a positive note then. Let's get, I like to ask people a little bit of a human question, and it's interesting some of the answers they give. So my last question for you is, what brings you joy?
I'm fortunate to have a 6-year-old running around the house who calls it the virus holiday, and his complete disregard to any of this stuff that we're talking about, and just sort of finding joy in a worm wriggling around on the patio is, that I can go back to that every evening, and that sort of puts things into perspective for me. I'm very confident that he will have a good life in years to come, which then helps you think about this period as a temporary period. Whereas if you're in it yourself and without the 6-year-old by your side, you probably go a little bit more into the moment itself. As humanity, as a race, as all the countries will eventually come out of it. It's just a question of how we survive the next few unforeseen months.
Excellent. I like that answer very much. Aritra, thank you very much. I appreciate you taking the time for a chat.
Not at all. It's always a pleasure. Thank you for having me.
Thank you so much.